ABF, which owns Twinings, that owns Ovaltine, that owns Primark. It's got a sugar division, it's got an agriculture division. Shares are up 52%, but it expects slower growth at Primark in the second half, Michael. Is that the news today?
I think so, yes. I mean, obviously we'll get a better indication of that later this week with Q1 GDP, but if you look at retail sales for the quarter, we're up 0.8, so...
Okay. Yeah. Thank you very much. Michael Hewson, Senior Market Analyst at CMC, kindly joining us in the studio. On the Move is next.
See you tomorrow.
They'll be speaking to Goldman Sachs.
Order filled.
Welcome to On the Move. I'm Francine Lacqua, Bloomberg's European headquarters here in London. We're just moments away from the start of European trading, and our markets team has everything covered from companies to currencies.
Order
Plus,
filled.
we'll be speaking to Jim O'Neill from Goldman Sachs Asset Management. That's coming up later in the program. Though first, here with me now, European business correspondent Caroline Hyde, John Farrow, our markets editor Manus Cranny, and our Europe editor David Tweed. Caroline, let's kick off things with you. A lot of focus on tech stocks.
There are. It's going to be all eyes on ARM, of course. Sales beating analyst estimates up 26%. But it's all about the developments. It's not hostage to the fortunes of Apple alone anymore. Of course, it's other big customers, Qualcomm, Samsung. So even if Apple is likely to see a deterioration in its profitability for the first quarter, well, maybe it won't feed in directly to ARM. Also, not all about smartphones. It's about other technology, TV, also wearable technology. Could we be seeing, of course, a smart watch, smart glasses very soon?
I like that, a smartwatch. John, talking about people who are smart, let's talk about Chinese manufacturing.
Yeah, the manufacturing data out of China signaling an expansion, but a slower expansion than estimated. Growth, we've seen that it already missed estimates. You can really see this reflected in the commodity market right now. Look at copper, it's down 10% this month alone, Francine.
All eyes, David, also on PMI figures.
Yeah, we're waiting to see those PMI numbers. Haven't got them yet. Do you have them on your screen?
I don't. I'll give them to you when we get them.
Okay.
Today's going to be a big day.
Big day because we're going to get France, then we're going to get Germany in half an hour, and then we'll get Europe, which looks as though it's going to be in the 21st month of contraction.
Manus, a lot of focus on telecoms as well.
Yeah, there's a triptych in focus, but the top line is on KPN, the Dutch telecoms carrier. The fixed line business doing well. The mobile business under pressure. They've got 3 core brands, one in Germany, Francine, where they're going to have to spend quite a bit of capital expenditure to keep up the pace. Looks like Germany is holding them back. And of course, we'll talk about Telecom Italia. And France Telecom has a credit downgrade from S&P, but we'll look at that a little bit later.
Yeah, overall, it's going to be a pretty interesting week because we'll have focus, of course, on Asia, on Europe. In terms of corporates, we're also just getting into the swing of things.
We are just getting into the swing of things, and certainly we're looking relatively on the upside. Richemont's going to be in perspective, of course, bit of luxury there. Interesting feeding with China, which, of course, seeing manufacturing once again disappointing in terms of growth, but Richemont still 30% gain in profit. Maybe it's all about the currency swings there.
We finally have that manufacturing data out of France. Now, it's actually a little bit better than estimated, 44.4 instead of 44.1 we were expecting. So it's still a contraction, but
still
David...
It's still a contraction, that's the point, but a little bit better because, I mean, the big concern was that we could see a big drop-off and a big trough in French manufacturing. So it's probably going to be seen as good news. Be interesting to see what's going on with the currency.
Francine, I think there's a couple of different things. China's hanging over the commodity markets. Equity futures were rising pre-market. It's going to be interesting to see how they play out.
Inflation is a concern, despite our views, and we've been trying to tell them don't worry about inflation in the sense of QE-inspired rapid inflation. Certainly, we look at inflation, the message we give to clients is that inflation is going to eat into your returns slowly. Every year into your returns in terms of cash, especially. Every single year you're going to lose 2-3%. So slowly. Inflation is a concern, and these macro themes. The new one is cash on deposit post-Cyprus. And
but it hasn't really had an effect on the markets. This is surprising.
Order filled. Order filled.
I think it's not a big surprise. I personally believe that the oil markets, or the oil price, peaked 2 years ago, and the gold story has been a highly speculative-based move, and particularly I just came back from Japan late last week, and I actually see more and more signs there that Japanese investors are starting to believe that they have some genuine domestic investment alternatives to think of for the first time in 20 years. So for those kind of people who were probably some of the earliest buyers of gold 12, 13 years ago, suddenly for them, why do they need gold anymore? So that makes sense to me as well. And at the core of why I sort of believe this for the past couple of years is China is in the process of switching from 3 decades of 10% plus growth to an era of something in the vicinity of 7, perhaps 7 to 8. I've been assuming 7.5% growth for this decade for the past 3 years, and as we've seen again in these flash numbers this morning, people are being forced to adjust their expectations as the evidence comes in that China's slower. And the whole commodity bull cycle was greatly driven by China growing above 10. So, to me, a lot of the commodity weakness is perfectly rational.
Jim, you were just saying that you just got back from Japan. Is this the big financial experiment? Is there a concern, do you concerned, that actually this may backfire?
Well, I find it funny when people start focusing.
Let's move it on to some of the African frontier economies, Jim. A lot of them, or some of them, are going to be probably re-rated as emerging economies. How much of an impact will that have on the way investors use these countries to put money in?
Well, it's a great story. I was just, I'm travelling even more intensely than I usually do at the moment as I move towards my final days at GSAM. I was in Africa a week before last, and it's a hugely exciting story. The only thing one has to be a little bit careful of, many of those markets are still very undeveloped, and suddenly there's a lot of people around the world regarding for years. I find myself thinking about Ethiopia, of all places, more than, well, I've never thought about it at all. That sort of creeps onto my radar. And there are many, many different places in the continent which look pretty interesting to me.
Jim, you just mentioned very quickly, I wanted to ask you about your last days at GSAM. When are you actually stepping down, and do you have any plans for where you're going to go?
Not that I'm counting, but it's a week today. I'll be done. I'm looking forward to. We're talking on a day where you have the most beautiful sunshine, of course, here in London. So if it's going to stay like this, I'm not going to be doing anything in a hurry, I guess. Yeah, the million-dollar question is, will it stay like this? Jim, let's hope for your gardening leave. Jim, thank you so much, and we'll hope to see you back in the studio very soon. Jim O'Neill there of Goldman Sachs Asset Management joining us from central London. Now, coming up next, the Holy Land goes Hollywood. How Israel found a way to attract tourists from China.
Order filled.